Good morning. Good morning from Los Angeles. Do I look very relaxed today? There are reasons for that, obviously. What are the reasons? Well, Monday, Wednesday, we did the additional live streams, and hopefully, you guys followed some of the. Okay, it wasn't financial advice; it's not trading advice. Let me get that out of the way. If you guys followed any of the stuff that I was doing, you know, you would have made some dollars. But we'll talk about that later. A couple of things. Well, first of all, thank you for the support. Thank you for in a short period of time. So we hit certain thresholds with YouTube. So as of actually yesterday, um, if you guys want to support the channel your own small way, we are going to create some memberships and things like that, and then how you guys can have access on a live basis to all my trading, because as you know, when I do buy something, my intent is to make money and sell it. And a lot of people say, well, how do I follow you? I mean, you can't follow me, but then you're not with me, every day from 6:30 a.m. until 1 p.m. when the markets are open in California, right? I mean, those are my hours anyway. So I may have sold something, I may have bought something additional. Timing is of the essence when it comes to trading and investing, obviously more than investing, trading and getting in, getting out. And I'm getting in and out at points that I see fit, and that I may not be live while I'm doing those. So how do you participate in that? I don't know. We're figuring that out. But so besides that, um, as of yesterday, actually, um, I'm able to accept super chats, super stickers, things like that. So if you guys want to support the channel in any shape or form, we appreciate it. It's a small token of appreciation of what I'm doing. It's not about making money, but I see the value that I'm adding to the community. So, if you guys feel generous after maybe you follow me and do a killer trade, um, hey, anyway, super chats are appreciated. Memberships are coming. At what level, whatever it is, I don't know. So we'll get that out of the way. The other thing is, please go to www.sergioavidian.com. Get your free newsletter. I'm going to send at least 2 to start with every month. And just click on subscribe, and then it's a free newsletter about economics. It has nothing to do with the other channel. So economics, inflation, the Fed, the interest rates, what I think is going to happen. It's not going to be stock advice, but then, I may talk about a few issues here and there, long-term, mostly investing stuff. So let's see, what else? What other business I have to take care of? That's about it. So Bruno, hi, Mojotronics is here. Oh, my my spammer is here. Cheeky Chops with a gold medal. Hey, man, that's pretty cool. So I'm gonna get into 4 or 5, or maybe 6 topics, 5, 6 topics as usual on Friday. Friday's format is a little different. So the format is going to, on Fridays, is more of talk about some issues, talk about some topics, talk about what's coming up. Big week coming up next week, massive. But I mean, on the 18th, I think 18th is it a Wednesday? 18th? Let's see. Yep. 18th is a Wednesday. So I'm going to be actually, I just thought about it. Okay, the Fed interest rate decision comes out, and I'm going to go live at 10 a.m. Pacific, 1 p.m. Eastern. So going forward, there's going to be 3 live streams, we decided. Mondays at 10 a.m. to whatever it goes, a couple of hours. You watch me live trade, talk about stocks that are moving, whatever not. Wednesdays, it's going to be another live stream from 10 a.m. to maybe the close. Some days, if I have nothing else to do, if I'm trading, why not, right? Just hop on, and whoever shows up, shows up. You guys can come in, go back, whatever. And on Fridays, it's going to be this format. The format of Power Hour is talk about 5, 6 topics, talk about what's bothering me about the economy, what's bothering me with the government, what What's bothering me with the Fed? A lot of things are bothering me these days when it comes to the government. I don't know about you guys' feelings. We'll talk about a little bit elections, maybe get into a little bit of that. Yeah, so it's going to be 3 live streams a week. We decided Monday, Wednesday, Friday. Now, if something is happening, Wednesday's live stream is going to be super interesting and important, obviously, because the Fed decision on interest rates, the first cut after 2 years of QT, quantitative tightening, is going to be on Wednesday, and it comes at 11 a.m. my time. So market's definitely going to react to that. So, and I'm going to be live, and hopefully we'll pull a couple of trades while we're doing it. But so Monday, Wednesday, please make a note. Please subscribe. Please turn on notifications so you're aware when I go live. Please, pass the channel, share the channel with others. There's already great content. I think we put like 300 pieces of videos, including shorts, and that's crazy amount of work actually that goes into it. But it's a labor of love at the moment. So monetization of the YouTube channel, by the way, is around the corner with AdSense, which is YouTube money, which, trust me, YouTube money is not what you guys think it is. Was I know from the other channel. I mean, it's fine, but it's not what you can't make a living doing YouTube, just like you can't make a living driving, rideshare. But let's see. That's about it. So please join Monday, Wednesdays, Fridays for Power Hour, live trading, all my positions, full transparency. That's Monday, Wednesday, Fridays. But on Fridays, I will talk about issues, subjects that you guys should share and talk with your family, with your kids, at the dinner table, at parties. I understand it may be boring, but it rules. I mean, these things change what you do on a day-to-day basis, right? It involves money. It involves your pocketbook. And what the government's doing sometimes is not the right thing, because I don't think the government does things that we all want most of the time anyway. So with that said, let's get into the first topic. The first topic I'm going to talk about is the power of investing, long-term investing. Okay. A lot of you know, or by now know, whoever knows me knows, I know finance more than I know anything else. That's my background. I'm going to do probably today, if you guys are on X, old Twitter, Elon Musk, right? Go follow me on Twitter. It's at Sergio Aved, at Sergio, obviously, and AVED. And follow me there. When I post something or when I do, on Twitter, they have things called Spaces now, where you can just hop on and do like it's a live stream without video, just audio. I think I'm going to do one of those today if I have time. If I don't, then probably next week, maybe the day of the Fed meeting. That would be interesting on Wednesday. But so let's do that. But investing is something that you can never be late for. Okay. A lot of people say, well, Serge, I'm 50, Serge, I'm 55, Serge, I'm 45, Serge, I'm 60. I haven't done anything. Well, there is no bad time to invest. And this hits the nail on the head, actually. This is a tweet that I caught my eye. Okay. So a lot of people worry about market going down, market going up. They try to time things. This is on long-term investing. We're not talking about trading now. We're not talking about short-term trading. We're not talking about day trading. We're not talking about swing trading, scalping, position trading. We're not talking about any of that. That's what I do, but I also have a long-term portfolio consisting of stocks that I think are good long-term investments. Okay. But then the market direction is important when it comes to these situations, right? And I've talked about this on previous videos about DCA. DCA is dollar cost averaging. Okay. So if you were a youngster, let's say 25 years old, and you put up $100, just $100 a week in an account and buy an ETF. ETF is exchange traded funds of spiders, let's say SPY, S&P 500, right? If you did that until the age of 65, with the compounding and with bear markets, with down, with up, with down, with up, all that, from 25 to 65 for 40 years, right? You're doing the same thing with Social Security anyway. By the time you get to 65, if you're 25 today, there's not going to be Social Security for you, because you're basically paying for, baby boomers who are going to retire by the 70 million actually over the last 10 years. So that $100 a week, by doing just dollar cost averaging, not worrying about what the market's at, going up, bull market, bear market, people are all concerned. Oh, they read the news on CNBC. Oh, by the bear market, it's a bull market. Who cares? So that $100 a week with compounding would turn into, you guys are ready for this, $1.25 million. Think about it. $100 a week. Okay. I mean, why is that? That's because over the history of 100 years plus, stocks or equities have returned on average between 9 and 11%. And if you do reinvest your dividends, you may get a little bit more, but let's say 10%, right? That's the power of compounding. That's the power of long-term investing. So all of you should be doing that. If you're 50, you can do it for 10 years, 12 years instead of 40 years, but you'll still have some appreciable money coming your way. And this is just $100 a week, okay? I saw this tweet by Mike Zaccardi. Don't want to miss those bull markets, he says, from First Trust Advisors. I guess that's where he works for. He said, average bull market lasts 4.3 years. And the average return in those 4.3 years is 149%. Okay. Average bear market lasts 0.9 years. You guys see that? That's like a 4-to-1 ratio here, right? And the downside is negative 32%. All right. So on this chart that he put up, which I thought was lovely, right? He put I can't even see the dates, but I think it goes back to the 50s, 40s, 50s, whatever. No, the point I'm trying to make here is you have to believe in the investing, long-term investing. You have to believe in the power of dollar cost averaging. So if you look at this chart, the yellow, tiny little yellow below the mean line are all the bear markets, and the blue, it looks like Mount Everest. Those are the bear markets, how long they have lasted and what the average percentage was. So over long periods of time, you shouldn't be worrying about, when you're long-term investing, about bear markets, bull markets, all that stuff, about timing. Oh, I bought the low, I sold the high, I bought the low, I saved myself money because I sold it. No, just put the money in there, dollar cost average. Let's say if you're doing $100 a week every Monday, let's say, okay, buy the spiders at whatever price they're in. You could be in a bear market, you could be in a bull market. If you're in a bull market, you're going to average up. If you're in a bear market, you're going to average down, obviously. But overall, this proves that long-term investing and passive investing, right? It's called passive investing. You're like a dummy, you're putting the money in. That's it. You're not thinking about, oh, NVIDIA did this, Apple did that, this announcement came, Federal Reserve did this, Washington did that, they raised taxes, right? None of that stuff. This is all in here, right? All of that. Like a dummy, you put the money, do your DCA, you'll be a very, very happy person, okay? And so proves the point. 4.3 years, average bull market lasts, and average bear market lasts only 0.9 years. 4-to-1 ratio. And if you look at the return, 149% positive versus 32% negative, that's also 4-to-1 ratio. It's not a joke, right? So believe in the power of long-term investing, believe in the power of passive investing, believe in the power of dollar cost averaging, and believe in the power of compounding. These things do not change. Believe. Put the money in. It's like there was a commercial, I think it was, I don't know what it was. I think it was the oven or something. The guy would say, set it and forget it. I'm like, that's what you do with this part. Trading, Me, different story, because I want to beat the benchmark. If S&P goes up 20%, well, I'm going to make sure my account, my personal trading account, is up 50%, 100%, right? But how many people, how many mutual funds even can beat the benchmarks? No, literally like 5%. There are 5,000 mutual funds out there, and only 5% of them can beat the market. And you have to do research. You have to find that 5%. That changes. No. Don't worry about any of that. For your long-term investing portfolio, power of compounding, power of DCA, dollar cost averaging, and, reinvest your dividends. Don't touch the money. You don't have to do $100 a week. You could do $50 a week, $20 a week, but invest. Start. It's never too late. Don't think of like, oh, I don't have time. All of us have $20, $50, $100 to our level to invest long term. Please do it. You'll be extremely happy in 10 years, 20 years, 30 years. Okay. So I thought I'd talk about this a little bit. And so this I've been talking about seriously for 3 months now, since I started the channel. Maybe 4 months. 4 months? I don't know how long you've been. Anyway, so there's two graphs that I'm going to talk about. One is from Fred, right? Fred stands for Federal Reserve Economic Data. These two charts are kind of similar, but one is from Fred, okay? And the other one, this one that I'm going to start with, is we're going to talk about personal saving rates and credit card debt. This chart is completely upside down. So the the kind of lime green one should be the red one. Unfortunately, it's not. This chart goes back to 2015, and the Fred chart, Federal Reserve Economic Data, this is all online, by the way. You guys can literally Google Fred, and it'll take you to St. Louis Fed's website, where they release all these graphs. This one goes back to 1985, okay? 40 years, okay? So this is about personal savings in the US versus credit card debt. Okay. Let's look at the picture's worth 1,000 words. Let's stay with that. Let's look at it. There's a red line here, or whatever color you guys want to call it, or whatever you're seeing on your screen at the moment. That's total credit card debt, okay? Meaning revolving credit, credit cards, basically, like the ones you have your B of A or Chase or whatever, okay? Look at that graph. Now, if that was a stock, I would go, beautiful. Lower left to upper right, 45-degree angle, wonderful. Except it's not. It's credit card debt. So since we just got rid of the gold standard in the 70s, right, and started borrowing money, and banks were flushed with cash, right, and we started printing. How do banks make money? They issue you credit. And who doesn't like credit? I like credit, but to a point that I don't abuse it. Well, this graph shows it's being abused completely. And now there are reasons for that, why that is. Because the other thing is, our economy has become, our GDP, 80% of it depends on consumer spending. It's not a manufacturing economy like it used to be 40, 50 years ago. So consumer spending is 80% of our GDP. Think about this. In what world? So if the consumer doesn't spend, and we all know, if we were to spend with the paychecks that we received, only use debit cards, this economy would collapse. None of that would happen. None of this would happen, right? The economy wouldn't be a $27 trillion GDP. So they issue the credit. It's like a drug. It's like crack, right? And then you keep your credit okay for a little bit. What they do? Other banks come around because they do a soft check on your credit score. They go, oh, this guy is credit worthy. Let me give him a credit card. Oh, and then B of A comes around. They go like, oh, let me give him a credit card. And what happens? Pretty soon, in your wallet, you'll have 10 credit cards with 10 different banks, American Express, all this stuff, right? With increasing credit lines. All right, well, that's crack. That's crack being pushed to you, okay? And so what do? Well, you start spending beyond your means now. Now, I'm not saying credit is bad. Credit is wonderful. Having a good credit score is amazing. Having the capacity or capability of buying something for your family, for your wife, a vacation or whatever is wonderful. But you guys have to understand these credit cards don't come, well, some of them do initially, with smart people actually can shuffle around with zero interest rate, credit card offers. They do the musical chairs until they get stuck. Once they get stuck, then what happens? This happens. Now you have 5,000 on one credit card, you have 10,000 on another credit card, you have 3,000 on another one. Well, obviously you did not pay your balances. And what's the interest rate on those credit cards, people? When they start charging you interest? Because that's where they want to get you. They want to get you hooked on crack, okay? And then it's like, let's not talk about crack. That's bad. Let's talk about printers, okay? They sell you the printer at what? $79? Full color printer, $100, right? But where did they get you? When you run out of color ink or black ink, you have to go buy that cartridge. Well, that cartridge is more as expensive as you paid for the printer. See what's happening here? It's the same thing with a credit card. Well, what I want to do is they want to get you, okay, yeah, 0 interest for 6 months, 0 interest for a year, and then those offers end. And then if you can't shuffle anymore, your wallet is full of credit cards, and now you start carrying balances, and now you start paying 30, 40, 50% interest on these credit cards. Now you are dead man because your monthly income is not keeping pace with what you're buying out there, right? But we love buying stuff. We love buying garbage we don't need. And that's all we do. We buy. I'm like, stop. Use credit to your advantage. If you're going to use credit cards, okay, pay your balance at the end of the month. Actually, credit is wonderful. Amazing. Somebody is giving you the opportunity to float their money. As opposed to them floating your money, you float their money. Okay? How does that work? You buy something on a credit card, piece of plastic. Okay. If you pay that balance within 30 days, you just bought something and floated their money for 30 days. After that, do it again. But make sure you pay your credit card balances. Don't carry balances, because the second you start carrying balances, that's the second part of the addiction. You go, yeah, I'll just make minimum payments. It will take you a lifetime. It will take you forever. And ultimately, your default, and then your beautiful 800, 750 credit with 10 credit cards in your wallet goes to nothing. And, you'll have judgments, right? Let's not play that game. Let's be smart about this. Let's float their money as opposed to our money. Meaning, don't buy shit you don't need. And don't extend yourself. So now the red line, as we see, goes back to 2015, right? Credit cards were fine, all that good stuff. From 2015 to 2000, let's say 1920, obviously, a steady upline, right? Because banks are issuing credit, interest rates are zero, they're making their 30%, wonderful. And then what happened? Black swan event, pandemic hit. And during the pandemic, what happened? Look at the correlation between the jagged, right, green or whatever, lime green one versus the red one. What happened? So government printed $7 trillion or plus and sent money to everyone. During that time, what do? We did the right thing. Our saving rates went through the roof. Okay? And our credit card debt went the right way because we paid off our car loans with the money government sent us. We paid off our mortgages. We upgraded our homes, all that good stuff. Okay? All right. Then look at right towards the end of 2020, 2021. After the second spike there where the savings rates went up, the economy started opening up. Just like a crack addict, I'm going to say crack, screw it, or methamphetamine addict, what do? After 2 years of doing the right thing, we go right back to what? Being an addict. And here it is. Now you look at all the way to the right of it, right? We started spending shit on plastic on stuff that we don't need. And look where we are today. Now, this is on the cusp of the economy going in a recession. I will talk about this quite a bit going forward because I definitely think we're going in a recession now, even if they cut the rates. But look let's talk about the savings rate versus the credit card debt. They should be replaced. They should be switching spots. It's not though. So now savings rate is at an all-time low. So what are we going to do? We're going to depend on another black swan event so the government can send us another $10 trillion. Is that what we're doing here? People, please don't do this. Give your kids advice. Don't do this because this is not a way to go. Look at the red line. It's through the chart. We're at $1.3 trillion in credit card debt. And our savings rate is literally nothing. You all know that the married couple in the age of 30, both working, have like less than $500 in savings. They have no rainy day fund. Okay, so this is the second chart that follows. This goes back to 1985. Okay, so since the blue line and the red line on this one, this is from Fed, the Federal Reserve. Since we abandoned manufacturing in this country, everything got shipped overseas for manufacturing, right? We know how that happened. We became a service economy. Look at the blue line. The blue line is personal savings rate. It's kind of steady. It's going like between 0 and 8. There are times that we really spend a lot. And if you guys can see, the correlation is when the savings rate is really low, the credit card, and this is the credit card, by the way. The other one was the total outstanding credit, revolving credit. This is the interest payments on the credit. I talked about that on an amazing video last week about the U.S. government's habit of having $35 trillion in debt. And their cost of servicing that debt is up to $1.2 trillion. And we are pretty much following the federal government. Do not follow the federal government. They're a bunch of idiots. They don't know what's going on. But look at this. This is the interest cost. Why did that spike right at the end? Well, the Fed raised the rates from 0 to 5%. And on all your credit cards, the carried balance went from 25% to 45%. Banks are now dummies, right? And this chart basically mirrors the other one, but it just goes back a little bit further. So this is what the U.S. economy depends on. Now, if we go in a recession, what's going to happen? A lot of credit is going to get blown off. It's already happening, right? People are going to not pay their credit cards. Well, the charge-offs are coming up now. And the spending power is going to be less, right? So tough times ahead. I know what to do. Come over here, listen to me. We'll trade the markets. We'll short the shit out of the markets, and then we'll figure it out. But this red line and the blue line should be reversed, should be switched. Please, people, I'm not telling you not to have credit, not to use credit. Credit is wonderful. It's the oil of the engine, right? If you're a successful business owner, definitely use credit, but don't extend credit to the point that you're carrying balances, you're facing this. This is just the interest payment. And our saving rates are low. Okay, let's say you're doing one of these crazy things and you get laid off now during this recession, which are coming. What are you going to do? Now you just blew your credit that you worked on for 10 years, right? You may lose your house, but you definitely lose those credit cards. They're going to shut the credit down. And they're going to, keep charging interest on that. And obviously, you're not going to pay. The charge-offs are going to happen. You're going to get calls from collection agents. Let's not do this. We played this game before. I mean, let's not just not do this, okay? So that's that. A little advice: please go talk to your friends, family. If you know people like this, let's just slap him in the head and go, "Wake up! Go watch this guy." I'll answer questions at the end. So next topic I'm going to talk about. I thought this was not only funny, this was this was pretty accurate. So this is how the U.S. economy functions. Okay, so there is a Twitter account, and this is not Jerome Powell. As we all know, Jerome Powell is the Federal Reserve Chairman. Uh, you guys pay attention to this. This is funny. Once in a while, we got to lighten up the mood. So it's a parody account. Obviously, it's not his account. So you guys can see where on the lower right-hand corner, there's a guy with a scope and a rifle. He's about to assassinate somebody, blow somebody's head off. That's the U.S. government living war to war. I am actually, I watched the debate begrudgingly. I watched whatever that was. Now, if any of this stuff is true, the rumors that Kamala had the questions beforehand, election is over. Seriously. Because that would be a no-no. Although I kind of know who I'm going to vote for already, but it was a biased event. I mean, I was like, what's going on here? Although Trump did horrible. Okay. I don't think he's a good debater. I honestly don't think. I think the high school kid would do better. But he just attacks, whatever. His usual whatever. It's fine. I don't think that changed too many minds to start with, these debates that they do. But if Kamala did cheat, we don't want to put a cheater in the White House, although Trump has done enough of that too. So my point is, let's get back to this picture. So there's a CIA or whatever sniper with a scope about to assassinate someone. That's the U.S. government living war to war. My concern now is if Kamala is going to lose and they figure it's going to lose, I honestly, I don't think it's going to, I hope it's not going to happen. They may just start a third world war here, because they already said, if you guys read in the news, what did they say? Ukraine now is going to use U.S. and British heavy missiles to bomb, long-range missiles to bomb within Russia. And Russia, Putin yesterday said, well, if that happens, that's NATO attacking my country and all bets are off. I'm like, what is happening here? Are any of you paying attention to what's happening here? This is horrible. But then this picture kind of sums it up. Okay? This sums it up. So the U.S. government lives war to war. Well, when war happens, what happens, right? Our economy actually picks up, especially the military side of the economy, because we have to produce weapons and planes and more ammunition, more guns and more this, and ship it around the world. The economy kind of starts moving around. And then on the last subject, when I talked about, the banks sending you all those credit cards like candy, right? So there is a lady in the third row in the back holding a gun to the girl's head in front of her. So those are the banks and corporations living bailout to bailout. So U.S. government starts a war, shit hits the fan, the Fed comes in, prints the money, puts it out there, sloshes it in the economy, and then the banks go, oh shit, a lot of people defaulted on their home mortgages and their credit cards. We need help. So those are the banks. But in the meantime, they hold a gun to your head with 45% interest rates on your credit cards. The girl in the middle are the landlords literally collecting rent from you and living month to month, who's holding a gun to the average American's head, which is the happy guy with no gun, looking forward to the American dream, which doesn't exist anymore. People living paycheck to paycheck. I thought this just summed everything up beautifully. I mean, it's not a cartoon, obviously, but I think this is so accurate when it comes to how this economy is functioning, right? In 2008, we had the great financial crisis. Who created the great financial crisis? Wall Street did. They packaged those mortgages and sold it all over the world, created a chaos, right? I mean, how many banks went under? I remember like today. I was shorting Countrywide while my best friend was working at Countrywide. Stock was $45 a share. I'm thinking, this is bad. The reason I was doing that, by the way, I had a mortgage company. And I'm going like, this shit's going to hit the fan. This is going to be horrible. because I was doing some of those mortgages called no income, no asset, 9 loans. I mean, there'd be like a gardener walk into my office. I go like, I need $500,000 loan. I'm like, no problem. And I'm going like, this is going to end horribly. And if you guys seen the movie Big Short, right? I mean, that was a wonderful movie. And so yeah, this is what's happening. So U.S. government is good at starting wars, pumping up the economy. Then the shit hits the fan. Banks come to the government, which happened in 2008, great financial crisis, right? They created something called TARP, Toxic Assets Repurchase Program. But you have to understand, in 2008, it was only $800 billion. Okay? When the pandemic happened, every 10 years, 15 years, something black swan event happens. So the 2008 financial crisis was all man-made, but it only took $800 billion to save the world. Okay? What happened during the pandemic? It took $8 trillion. On the next one, we're going to need $25 trillion. You get it? This is what's happening. So banks hold a gun to the landlord's head, and landlord holds a gun to the average American's head, living paycheck to paycheck. And I bet you the guy in front, if you took that guy with his credit card debt soaring, with his credit card interest payments soaring, turn him upside down and shake him at the end of the month, I'll bet you 1 red cent will not fall out of his pocket. So that's where our economy is these days. And I thought this was pretty cool. So next topic I'm going to talk about, as I said, I followed the Kobesi letter like religiously. It's on Twitter. Please go check it out. Okay. So, I'm not a socialist. I'm a capitalist. Okay. It's flat out. I don't believe in any of this other stuff that's going on in this country. Look, man, you educate yourself, you make your bed, you sleep in it. Take some responsibility, as opposed to, oh, it's this fault, it's their fault. It's always somebody's fault. I'm like, no, it's your fault. Where you are in life is your fault. Nobody's putting a gun to your head to do anything. It's a free country. Last time I checked, still it's a free country to a point. But so they put out this tweet, which I thought amazing. It goes to show the disparity between the haves and the have-nots. I talked about this on other videos in the past. Haves and have-nots. Okay? The haves, Bentleys, Ferraris, and the have-nots are the people who go shopping at the dollar store or Dollar General. Okay? Or Dollar Tree. Okay? Or 99-cent store, whatever. But this tweet summed it up. The wealth gap is widening. Of course it is, because when we had zero interest rates for 15 years, ZERP, who benefited from zero interest rates the most? The wealthy did. Because they borrowed at 0%, bought all the real estate, bought all the assets, they jacked up the rents, and that's it. That's how that's how you play Monopoly. So the wealth gap is widening. Sure it is. And, join the top 5%. There are ways to do it. So Ferrari, stock symbol is RACE, RACE. Share price have skyrocketed by 122% since the beginning of 2023 and are trading near all-time highs. So who buys Ferraris? I can't. I probably could, but there's not a goddamn chance I would. I'd rather buy 4 cars that are dependable with the price of 1 Ferrari. However, so this shows the disparity, the disparity or the gap, wealth gap widening. So Ferrari shares are going this way, as you guys can see on the chart on the right. And at the same time, Dollar General stock, DG is the symbol, David George, is down 65% and is close to its 7-year low. Who shops at the dollar store? Dollar Tree. Dollar General. Who shops there? People who live paycheck to paycheck, like the guy on the last one with the gun to his head. Okay. Well, they're saying, by the way, they're the majority, right? The ones that are buying Ferraris are only like 2% of the population can do that. 98% are the other group. So if Dollar General stock or Dollar Tree stock is doing so bad, why? The average American can't even buy it there. Okay. So I'm going like, okay, if that's happening currently, which it is, what does that say about the economy or our GDP? What's going to happen? We can already hardly spend money at the Dollar General store while the top is buying Ferrari after Ferrari, taking pictures on their social media. So One is the thriving luxury car manufacturers and struggling discount stores summarizes the current economic backdrop. Case closed. Enough said. The wealth divide is growing, and the rich have never been richer than they are now. Okay. Again, I'm a capitalist, but I'm fair. Fairness has to come into play. And the last line, which I've been talking about for 3 months. How is this a strong economy? We'll leave that question open. Maybe some of you will answer that. So that's that topic I want to talk about. I wanted to talk about that the wealth gap between the haves and have-nots has never been any wider, without a question, every shape or form. But you can join the party if you did what I asked you to do on the first segment, which was invest, dollar cost average, learn how to trade, try to move yourself up in the world, because nobody's going to give you anything for free. And the next topic I want to talk about, I talked about this last week, and the title of today's live stream Power Hour is very relevant to this. Does the government gaslight us with their economic data? Absolutely, without a question, unequivocally. Yesterday, they came out with the CPI, PPI. Well, PPI, I think yesterday, 1.8%. Oh, last week they came out with the CPI, 2.4% for the year. You all believe it's 2.4% for the year? Okay. So Charlie Bilello, who I follow on Twitter, came up with this. These are facts. And I double-checked these, by the way, and just Googled each one. Actually, a couple of them are low. But let's go with this one. Gaslighting to its best by the government. Government brings out the saying, oh, inflation is under control. Everything is wonderful. I'm like, what world are you people living in? not this United States. But anyway, so price increases over the last 4 years. CPI on medical care is up 7.8%. So you have to divide all these numbers by 4 to see how much you're being gaslit by the government. Okay, because their inflation basket most of the time does not even include food and energy. And who doesn't eat and who doesn't buy gas? I don't know. But you guys can all Google this and fact check me, just like ABC fact check Trump during the debate. You guys can all fact check me on this. All right, let's do this. CPI medical care 7.8. I think that's pretty low, actually. I fact checked that one. Actually, that's in the 14% range. And I thought 14% was low. I mean, my health insurance bill has doubled over the last 4 years. That's like 25% a year. CPI apparel, 12.7%. So let's do the mental math. Let's divide it by 4. That's 3%, 3.1, 3.2%. So it's higher than what government is saying. So what is in the government basket, you may ask? Please go research that yourselves. It's like computer chips and airplane parts and all the shit that nobody buys. CPI used cars. This is what the used car price is correcting over the last couple of years. Up 18.3%. CPI new cars up 20.5%. So divide that by 4, that's 5%. Where is 2.4? I don't know. CPI food at home, 21.4%. CPI shelter, meaning your rent, 23.4%. CPI food away from home. God, you're just celebrating something, you go out. That's 25.4%. Electricity, which you need when you buy a house. And a lot of people don't think it's just the mortgage and the property tax. No, buying a house is a money pit. You constantly have to spend money on that. On electricity, 30% almost, 29.8%. Divide that by 4, that's 7.5% a year. Stop gaslighting me, government. Where is the 2.4%? Not there. Next one, CPI gas and utilities, 34.9%. CPI transportation, 38.8%. U.S. home prices, 48%. Now, if you own the if you own the house in the U.S., lucky enough to buy it 20 years ago, because not too many people can afford a house these days. Obviously, that 48% is working in your favor. Gaining some equity in your house is actually combating inflation, which is good. This is my favorite. This is actually exactly right. This is actually this year alone, I faced this number. CPI auto insurance, 52.4%. This year, my daughter got a car, and she's young, obviously. This is how much my premiums have gone up this year, 52%. CPI gasoline 53.5%. CPI fuel oil, because there's in the East there are a lot of people that use fuel oil and natural heating oil actually to heat their homes and stuff. 54.9%. So government, where is 2.4%? None of these numbers are in that 2.4% basket. So stop gaslighting the people. Stop. Because we're not stupid. I mean, just stop. It's just ridiculous. So there you go. If you experienced any of these, I'm pretty sure you all have. These are, I think, a little bit more accurate. Thank God, by the way, to YouTube. Thank God to people who speak out. This is not anti-government propaganda, by the way. This shows that there are people who are thinking and putting numbers together and digging deep and debunking what the government's movie looks like. They go 2.4%, everything is fine. Yesterday, PPI 1.7%. Oh, everything is fine. Unemployment's great. Everything is fine. Is that why you're going to about to cut rates next Wednesday while I'm live? I don't think so. So, and one last topic. This goes back, actually, this is a good one. This goes back to the first segment where I talked about investing. Bear markets last 4.3 years. I'm sorry, bull markets last 4.3 years. Bear markets last 0.9 years. Don't pay attention to buying low, selling high. In long-term investing is drip, drip, drip system, DCA. The number of 401ks. Now, not every company that you work for will give you a 401k. But if they were, please max it out and make sure they're matching you to a certain degree. Okay. The number of 401ks, this is for retirement. You don't have to, if you don't have a 401k, if you're an independent contractor, a SEP IRA. If you're open an IRA, I mean, you got to look out for your in retirement. Because I got 7 years to go, 7.5 years to go to 65 to get my Social Security money back that I paid all my life. I'm kind of actually nervous that I may not even get it. They may move the age to, like, I don't know, 70 or something, right? But then who needs the government when it comes to that? Do your own retirement planning, right? So if a company is offering a 401k plan, just max it out every year and make sure they contribute as well. And most companies do about 50%. So the number of 401ks, this shows you guys the power of long-term investing. The 401k accounts with balances of at least $1 million soared to a record of 497,000 in Q2 2024. This is up 2.5% from the 485,000 seen in Q1. So what is happening? The market, most of this money is going into passive investments, right? Such as ETFs and spiders and things like that. And sure, there you go. That's how it works. Drip, drip, drip. Look at the chart. See, this is the chart that I want to see. Okay. Over the last 4 years, the number of millionaire accounts for 401ks have tripled. However, one caveat. So we talked about that, how to protect yourself against inflation, what investments will work, what types of investments. Gold just hit a new high, by the way. The purchasing power of 1 million today is equivalent to 750,000 prior to 2020. Yeah, that's inflation. That's about 25%. And the true rate of inflation, people, is 6 to 7% per year. Your single dollar is losing purchasing power by 6 or 7% a year. Do not get gaslit by the government. Do not believe a word that the government is saying. It's not 2.4%. It's about 6 or 7% that your money is losing its purchasing power. Meanwhile, the average 401k account balance in Q2 was 127.1, well below the 2021 peak. Now, 2021 peak was, as we know, time of the pandemic. So the point I'm trying to make is, please look out for yourself. Don't expect government to help you in anything. 401, if you're working at a major company or anywhere that's offering you a 401k, please take advantage of it. If you're a self-employed person, please open an IRA, SEP IRA. You get the tax deduction. You get the tax deferred income in it. Until you take the money out, you're not paying any interest. Please research it. Please take care of your own retirement. Forget about Forget about the government helping you. Look, if you're working at a W-2, you're going to pay, into the Social Security fund. You have to. I mean, that's it. There's no two ways about it. You can't tell your employer, don't take Social Security taxes out. I mean, it's gonna. If you're young, if you're in your 30s, you're paying into the Social Security fund. Who are you paying for? 70 million baby boomers are about to retire. 70 million. Think about it. But those people also paid all their lives. You have to understand that. So now have to get something out of it. But if you're 30 and paying into the Social Security fund, most likely you're not going to get your money. So you're paying for the people. It's like a Ponzi, right? The people paying into the fund today are taking care of the people who paid. But what did the government do on that one? They went and raided the Social Security fund. They borrowed against it too. So don't trust the government whatsoever, especially when it comes to your money. Other things, maybe to a point. So yeah, please look out for your own future. Invest. And those are the topics. So what I'm going to do now is go actually and answer some of your questions. All right. So Cheeky Chops, hello. Morning traders, we Zoom. Credit card debt coinciding. Yeah, I mean, well, yeah, because when they raised the rates, right, on the credit card interest rates on outstanding balances went to 40%. That's why that line is looking parabolic like that. Post-COVID party spending, yeah, but COVID ended 2 years ago, Bruno. I mean, we need to take care of our own house here. Zoom says good credit lessons. Yeah, absolutely. Tell that to your kids if you have kids. Vic says if the consumer stops spending, the Uncle Ben will come with helicopter. Yeah, and then inflation will come back, and we'll have something called stagflation. You don't want that, Vic. You know where they have stagflation? Argentina, Venezuela, Cuba. You don't want that. You definitely don't want that. Stagflation is stagnant economy with inflation. Derek says you have to use credit card because commodities are marked up with credit card fees. Use your phone's calendar for reminders. The first part I don't kind of agree with. Second part, there's your Bible. Derek hit the nail on the head. Use your phone's calendar in case, because the first day you will see this massive hit on your, and then they will hit you with that interest cost for the 30 days. You'll make a minimum payment because you're tight or whatever. Now you're paying interest on interest. Like, please, I lose sleep over this stuff. Let's start over with, no, we're not going to talk about politics. Actually, I might start a political channel. Bruno says socialized corporate debt. I don't believe in any socialized. Show me one credit card that has. Oh, absolutely. Absolutely. Go look at your APR. If you may have 800 credit, Bruno. People who don't have 800 credit, people miss a couple of payments. What happens? You get a notification in the email saying, "Oh, your APR just went up because you missed you're 30 days late on this credit," because they're constantly soft checking your credit. Oh, absolutely. Go check. If you don't miss payments, go talk to a friend who missed a payment or who defaulted on a credit card. The letter that they get from the credit card company. Oh, well, you missed one single payment. You were 1 day late. You forgot. Now your credit, your APR is 45%. Trust me. There you go. Exactly, Derek. 100%. 100%. Not even 2 months. One miss. You miss one payment. Guaranteed you're getting the 45 up your, what. You must not stop there. It's now the $1.25 store. Bought razors there yesterday. This is where I'm at. Okay. MacD says, are you going to teach us how to trade? I have been. Where have you been? You must be new on this channel. For 3 months. Go watch the past stuff. The books I recommended. I'm even doing more live streams now to teach you guys, not to teach you guys, to make you aware of my positions with full transparency. On which platform is your after hours? Okay. Oh, no. There is no C there. Is there a C there? Shit. Chris? Oh, Lord. Okay. So Bruno is asking about After Hours. After Hours is a really cool app that you can connect By the way, it's SERG8 STOK, not CK. So Serge 8 STOK, not CK. So I think Chris put that incorrectly in the running tape here. Okay. So on that one, it's my Robinhood account that I started with $1,000, but it's on a delay, at least 6-8 hours, maybe overnight delay. So you're not going to be able to catch of what I'm buying and selling actively. But I thought it's a good start. I like the app actually, because there's a community of traders there, and and there's a couple of people I follow, and about 150 people are following me there, I think. But it's on a delay, so I don't know how valuable that may be, but it's after hours. The app, go to the app store, download it, and if you search for SERG8 STOK, you follow me, you'll follow my Robinhood account. 4 years ago was during the peak of COVID with no demand and prices at its lowest. Not sure what that is. Context. I only believe stats. I fake myself. Okay. Sounds good. Nice hat, Sergio. That sounds okay. We have a little hiccup going on there. We'll chat about that. I'll join your. You've been very active on X, sir. I don't know. Power hour. What's good, Serge? What's up, Steven? See. They're all onto the game. Okay. Okay. Yeah, I have no mods actually, but when channel is growing, I'll probably need mods pretty soon. So I'll do that. I answered the questions. I'll answer the questions at the end. Let me go share my trading. So if you join me on Monday, if you join me on Wednesday, you know what positions I was buying. You know what I was buying, what I was selling, what I was doing. Hopefully you did some of it. If you didn't do it, then you didn't do it. If you did the options, fine. If you didn't, so I'll go. I have yesterday and today I have sold everything except a tiny little position I have left over. Let me put this up here. You guys can see the screen, right? All right. Again, I am 96% in cash. Sold a couple things a little too early, but I don't care. It doesn't make any difference whatsoever. Money is money. So I had told you guys to watch Upstart. I had bought Upstart. I had 65 calls, 65 of the October 40 calls. Those were sold yesterday and most of it today with a double. I had bought Zim transportation. Those yesterday, all of it was sold yesterday. I had 50 of those calls. This is, you know what, let me show the charts so you guys can, when I go through my Mag 7 and my new watch list, you guys will understand. This is the S&P 500 2-minute chart. Just keeps grinding higher and higher and higher. Beautiful chart. If you're day trading, obviously. This is the 1-year chart. About to make a new ATH, as we call it. I think it'll be the 39th ATH. ATH stands for all-time high. Let's make this chart bigger so you all can see. Well, here it is. Let's set my style to my style. All right, so this is the daily S&P 500 chart. Positions that I had talked to you guys about, what I'm buying. I was long NVIDIA. I sold those actually. I had bought them on Monday. I sold them on Wednesday. This is Upstart. I gave you guys the trade literally at the low because it was about 32. I bought October 18th, 40 calls, 40 is here. I paid an average of $1.61 for 65 of them, and I'm done. As of today, these are the October ones that I sold. I sold them on an average of about 210. Of course, the 40s, they're like 270 now. So I probably should have scaled out, but I don't like the market. I don't like what's going to happen next week. So it's okay. It's a very profitable trade. I was also, I talked to you guys about ZIM, ZIM, which is transportation company, actually. Okay, so I gave you guys ZIM. This is Upstart. Okay, so I bought it right at the 50-day average. People ask me, explain to us why you're buying, what you're buying. I bought it right about 32 and change, right at the 50 EMA. And on Wednesday, go watch the Power Hour on Wednesday and go watch the Power Hour on Monday. Live stream. Between Monday and Wednesday, I added it. Yesterday and today, I liquidated this position. I said it'll probably get to the middle Bollinger Band. Go watch it. Go watch the live stream from Wednesday, which is about 38.74. Stock is 37.87. If you bought the options or bought the stock, listening to me, again, it's not financial or trading advice. You would have done extremely well. I bought ZIM, and I sold all this position yesterday. I said, why did I buy it? I bought it. It was right at May. Yesterday had a wonderful, this is ZIM Integrated Shipping. This is a shipping company. I had bought the October $20 calls with 50 of them with an average cost of 51 cents. I sold them yesterday all between $1.10, $1.20. So that was a double. That was good. I told you guys about Affirm. Remember that. Here's Affirm. I mean, all these pullbacks that I buy, people go like, why are you buying here? I'm like, yeah, just pretty simple. So Affirm was another one. Stock was 45, pulled back to almost 35, almost to its 20 EMA. And sure enough, retesting the high. I bought some stock and options on that. I liquidated that today and yesterday as well. Nvidia, I sold that. I only had 5 options, but on these positions, I had much bigger positions, so I had to be really careful. And the only position I have at the moment is Hain Celestial. I bought 300 of these lottery tickets. Hain Celestial, October 18th expiration, $10 calls at a nickel, 5 cents. So, I don't know. Well, stock moves to like 9, they'll double, triple probably, but I'm willing to lose everything on that. It's only $1,500. So overall, it was a fantastic week, actually, of trading. Let's go through, the watch list and then what else I'm watching. I talked to you guys about First Solar. I'm going to definitely, it's on my watch list. It had a pretty massive move, actually. And today it retested the high. It's kind of go sideways. I like this stock. I like the chart. I like these setups when the stocks start going sideways and then start breaking out. You guys need to join the party, but now that I'm doing live streams Mondays and Wednesdays, you guys will probably catch it. With me. What else? Okay, let's go through. I'll talk to you. Okay, let's go through my watch list. ASD Space Mobile. This is the SpaceX's competitor. They have a launch coming up. Stock was $2 number. Okay, literally went up to 40. It's a very wild stock, so you got to have the stomach to do that. Oh, actually, I have one other position, which I know somebody at the chat bought that, and he bought it cheaper than me, which is like pissing me off. I only bought 10 options. I have a position. Let's see where that position is. I sold half of it yesterday. I have 5 calls on BITX, which is the double leveraged Bitcoin ETF. Symbol is BITX. I had 10 with a cost of 118. Now I have 5. I sold 5 yesterday at 180. Actually, I will probably sell that today because we're right at the 50-day average. Let me see where we are on that. There's my position. 195.2. My cost is, here's my cost. 5 calls at 118. I have about $500. I took about $400 profit yesterday. Yeah, I'll put them at $2. Sell 5 at $2. 118 to 2. 82 cents times 5 is about 400 and change. I want to be pretty much all cash for next week. At the moment, I am actually, after this, I'll probably, Yeah, it will be all cash except the Hain Celestial position. I don't have any other positions, so we'll click confirm. We'll click send. And we just sold it. We're done. We're done with that position as well. Took the profit. Okay, so we are pretty much all cash. So WeZoom, I sold it at 2. You just saw it. You bought it at 110. You told me, which pissed me off. I don't know how you got a cheaper price than I did, but hey, life will go on. Profit is profit. All right, so this is that. A couple of small names that I'm following, actually. There was one that on my most active trading list. These are really not for the faint-hearted. As you guys can see, it's called Tenon Medical Inc. These are for mostly for day traders, to be perfectly honest with you guys. The stock actually was $3 or $2 after all these reverse splits. So if you're a day trader, what I suggested, and if you have some sort of scanner, just go scan, top 10% NASDAQ openers before the market, gap uppers and things like that. And then if you're a day trader, you can find yourself day trader. And then TNON was one of them for 2 days in a row. It was a $2.50 number, hit 16 today. So I'm not a day trader, but once in a while I do pay attention to certain things. And let's go through the SPY daily. This is the daily S&P 500. It's 2 minute. So I watch a 2 minute, 10 minute, 60 minute chart. Daily, definitely gonna look at what is there not to like. We're approaching all-time highs. We're right here up top. This will be a third top? No, probably not. When the Fed cuts the rates, the initial reaction, and plus MACD is rolling up, the initial reaction will probably be positive. Will take us to all-time highs to probably 5,700 on the S&P 500. And, after that, we'll see where the game starts, because I talked about the Fed pivot on a video. Please go check it out. It's on the channel. I said, when the Fed starts cutting interest rates, that may be the top of the market. There are a lot of correlations on the past Fed pivots and this. This is the triple Qs, obviously, looking kind of similar looking chart, although it's not anywhere near its all-time highs, because there are stocks that are lagging in the Mag 7, like Microsoft and not. So this is NVIDIA, down a little bit today, but all these stocks are looking similar, obviously. Tesla has a catalyst coming up on the 10th, as we know. They're going to announce the robo-taxi actually right in my backyard at the Warner Studios. I may actually go to that. So WeZoom, let me know if you're interested in going to that. So that's Tesla. I kind of like the chart. I mean, above it's 50, above it's 20, above it's 200. On a breakout of 240, I see a possibility here. Will it going to be enough catalyst for it to move though? I'm not sure, but we'll trade what's given. This is Microsoft. Microsoft is kind of breaking out today of this little high area. So, stocks okay. A little W action happening here. It stopped twice. Once it just broke its 200-day and then came back and then retested it. Those are the retests. And this is what I'm talking about when I talk about bullish divergences, right? This is the MACD when it broke its 200-day right here. And then the second time around, he retested the same low almost, and the MACD was a lot higher. So you guys need to learn. And then you can do the same thing with RSI. If you were watching RSI, the usual 14 RSI, you would have had a bullish divergence presented to you. Amazon broke out yesterday out of a trading pattern. I mean, these are all positive, nice charts. There's nothing not to like about it. But then there are really strong ones like Meta in Mag 7 and Netflix. I mean, look at Meta. Meta is going to make an all-time high pretty soon. Just been biding its time, going sideways, actually. Netflix may be at an all-time high. Yeah, Netflix is definitely going sideways, gathering energy before the all-time high. Apple, a little underperformance. Google, definitely the worst out of the Mag 7. As you guys can see, this is all the Mag 7s, right? Look at Google's chart versus look at Meta's chart, how different it is. I talk about this quite a bit. I talk about underperforming and outperforming, right? Again, my watch list doesn't change that much. I add a few things, I take a few things out. Kava has been on my list for months, retesting its old high. I mean, again, Bitcoin is right about 59,000. MicroStrategy is the surrogate of Bitcoin, still going sideways, just like Bitcoin is. This is the Bitcoin Trust by BlackRock, IBIT. I mean, it's acting exactly like Bitcoin is, although the other one I just sold the options on, the remaining 5 options I had, is BITX, which is the double leveraged Bitcoin. And that's this one right there. If you guys have any stock questions, put them in the chat. I'll be on probably for another 20 minutes. So I did run, you know what, let me look at my list here. Let me see what I added. We're talking about, actually, let's look at the topic that I talked about, Ferrari versus Dollar General. Race is the symbol on Ferrari. Yeah, look at Ferrari, right? Just made an all-time high, pulled back to the 20 EMA. Now it's going to go back up, make another all-time high. And this is Dollar General. Look at that. Death. Nothing. Right? Look how different that is. That's the disparity. That's the gap, wealth gap between the haves and the have-nots. I mean, are there retailers doing well? Yeah. Also Dollar General is probably fault as well. Like Walmart, I think, is pretty close to its all-time high, or if not an all-time high. Let's look at Walmart. Yep, there you go. There's a retailer that knows what the heck is going on, because they have online presence as well as brick and mortar presence. And look at Walmart's chart, right? In fact, at a new all-time high today. Beautiful, beautiful uptrend. Let's look at Target. And not as good as Walmart, obviously, but still decent. Let me look at my list. Let's see if I can throw you guys some other names, and then I'll answer questions. Look at the Apple. Affirm was obviously we talked about. Let's look at AMD. The AMD is just kind of in a basing, bottoming. If you want to trade it. Micron, same thing. If look at how different this one is than, let's say, an NVIDIA, right? I mean, it retested, actually made a lower low, reaction low than the mini crash that we had. This is the semiconductor index. Looking decent. Found support at the 200 EMA twice. Let's look at Avago. I'm just giving you guys my trading list. Beautiful chart. I mean, people go like, Serge, where do you buy? Where do you sell? Well, I mean, again, no brainers here. Okay. Avago gets to its 200-day EMA. It's right here. I'm highlighting it. What does it do after that? It gets right back into resistance right here, about 175. But that stock moved from 130 in a matter of, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In a matter of 10 trading sessions, which is 2 weeks, from 130 to 170. Okay. Then whatever happens. You took your profit. If you're a trader, this is a trader. This is not investing, long-term holding. It retests the 200 EMA to the penny, literally, and then puts in a key reversal day. Now back to 170. I mean, this is what you got to trade. And people go like, how do you know? How do you know it's going to stop there? Well, I don't know it's going to stop there. But what I know is that it would be better if I bought it close to its 200 EMA than if I bought it somewhere else. So that's why I did what I did with Upstart. That's why I did what I did with Affirm. You just wait for your spot. You got to follow the 3 Ps. The 3 Ps are patient, positioning, and planning. You have a plan. When it gets there, you execute your plan. Trading is not that difficult, people. You just got to be comfortable with what you're doing, though. And don't be a stock jockey. And Alibaba, I liked Alibaba in the mid-70s. I still like it. About 85. Big company, obviously, but a lot of stuff's going on with the Chinese economy these days. One, actually, I just added it, is Instacart. Now, I hate these in general. I hate these gig companies, of course. But no bias. Get your bias out of there. Okay. What is Instacart doing? Instacart is actually acting exactly the way I like stocks to act. It came public, went down to the low 20s, had a big move up, 20 to 37, almost double, and now it's just kind of going sideways, right? On the next breakout, the stock is going to 60. So you just wait for the breakout. I mean, you can trade these little zigzags here, but I'm not interested in that. I'm interested in the bigger move. So I added Instacart to my list. Let's see, what else? Yeah, I was watching Coinbase, but then I watched MicroStrategy and a couple other ones. Oh, the other one was Carvana. If Carvana rallies, I may short Carvana now, actually, because I think it had a breakdown first time in a long time. I've been watching Carvana since like $10. And I've been talking about Carvana on this channel for God knows how long, about 4 months that I started it. Yeah, I'm not sure I like Carvana as much as I liked before, but then still in a decent uptrend. I mean, yeah, 120 got to hold. If 120 doesn't hold, sayonara. First Solar is definitely something I'm watching. A lot of people ask me about GameStop. I mean, they issued another freaking 40, 30, 20 million shares. I'm not even sure what's going on there. But then the company keeps raising cash, selling stock to retail. Robinhood, people ask me about that. Decent chart, I'm pretty sure. Yeah, I mean, yeah, whatever. There are better charts out there. The other thing that I want you guys to pay attention to, if the rally is going to broaden out, you guys need to pay attention to the Russell 2000, right? If you look at the S&P 500 versus the Russell 2000 on a long-term basis, the difference is immense, okay? So when they start cutting rates, smaller companies do better. So you got to pay attention to the Russell 2000 for sure, without a question, okay? And the symbol on that is IWM. W, Workday, Mary. A small name that I'm actually on my watch list now is Lumen. Like the chart, just like the chart. Billion shares outstanding. It's a pretty big company. Why do I like the chart? Stock was $1, goes to 8, literally goes parabolic, trading 400 million shares a day. Algos are running it, obviously. Then what happens? It goes from 8 down to 4.5, which is exactly 50% correction. Then now it's kind of going sideways. I am definitely watching Lumen. LUMN is the symbol. The second MACD turns back up, I'm going to be all over this because the next leg up is going to be into the double digits. The other thing is, you can get stuck watching these things on a short-term basis, but once in a while, you guys need to take the bigger picture in mind. So 1 day, 3-year, right? See, these are the patterns that you got to watch for. Like stock dead. Stock was 14, 15 bucks, died, went to $1, actually less than $1, going sideways. Something happens, catalyst. Picture is worth 1,000 words. You just got to make sure the volume is there. Stock starts moving up. It goes from 1 to 8 in a matter of a week and a half. Then now it's kind of consolidating, going sideways. Moving averages are catching up. Put it on your watch list, LUMN. They have options. I wouldn't trade options. I would just trade the stock. I'm pretty sure on the next leg up, stock is getting to 12. Let's see what else. If you guys have questions for symbols, put them in the chat. When I get back, I'll look at it. Oh, Palantir. I got added to the S&P 500. Nice chart, without a question. I mean, see the uptrend? Just an uptrend. Stock comes and just hugs the 200 EMA, hugs the 200 EMA on the crash, and hug the 200 EMA. I don't know what else to say, people. You just got to keep it simple, stupid. I mean, look, there are a million other things I watch at, but then when all they line up, I mean, stock does is go sideways for 2 months and then breaks out, goes sideways, consolidates, and goes up. Same thing right here. These are the patterns you guys got to watch. What else is there to say? I know, let's see, Starbucks is on my list now because they changed the CEO. I really don't like the company, but then I'm just watching it. Obviously, when they changed the CEO, what happened? They got a huge pop, and then if you look at Starbucks going back a while, then you appreciate it more. Sorry, this one. Okay, I mean, it has some room, obviously, but, not a huge mover. Just watch it. Just watch actually for retail purposes, right? You guys can get a lot of ideas how the economy is doing watching retail stocks. S&P 500 I already put up. We haven't talked about TLT for a while. TLT is, and I talked about TLT endlessly before it broke out for months. This is the inverse of the 10-year note. 20-year note. So if this chart's going up, that means interest rates are going down, right? And it bottomed at 88, now it's at 100. That means interest rates. This is forecasting that the Fed is going to cut the rates, and Fed never cuts rates when the economy is doing great. So Upstart, I told you guys about. If you guys have questions, put it please in the chat. As far as the symbols are concerned, actually, somebody from the chat sent me a symbol while I'm pretty sure he's here. NNE is the symbol. Let's see. Let's take a look at NNE. He goes, watch NNE. I go, okay. It is called nanonuclear. Hold on a second. Huh. Is this a new issue? Yeah, it is a new issue. Was it some sort of reverse merger or something? Okay, stock is at 3, starts moving up, goes above its 200 and then the 50 and 20, breaks out. What? Hold on a second. We may have something here. Interesting. 6 to 36, 37. Typical parabolic. Everybody gets wiped out. Second retest, and then absolutely everybody gets wiped out. They probably had a lot of secondaries in here somewhere. It retests to 6, which is where your buying point should be, then bounces. This is pretty good trader. Thanks, Vic. Back to 14, retested at 6.5. I mean, yeah, I wouldn't be buyer here. Yeah, on the next pullback, I'm adding this to my watch list now. Thanks, Nick. Vic. NNE is the symbol. Yeah, let me go back to the screen, see if you guys have any questions about other things. Okay, let's see. ATH all-time high, yes. Thanks. Zoom. I didn't get a Zoom notification. Well, if you watch Power Hour, you did. So, hey, man, what do you want me to do? Text you when I'm doing it? You gotta pay for that, Zoom. There ain't no free meal. Okay, this is a good comment. Vic says, Sergio, I think next week. Yeah, I agree. That's why I'm 98. Actually, just sold that last option on mine. It was a great week. It was really, really a fantastic week. Never worry about leaving money on the table. It's Sergio, I think next week. Yeah, I agree. I think on Wednesday on, we'll start, maybe a couple days up. And week after that, I think we'll start selling off. Should have sold what? I just sold it at 2. Okay, you're writing me now, Weezum. All right, okay, so Stephen, one thing we need to learn when you start watching me, all the news is already out. The market already has factored all that in, okay? When the news is out, it gets priced in. So by the time we hear the news, it's inconsequential, really, okay? So when it hits the tape, stock does react, obviously. But at the size of Microsoft, this is a 3 trillion or 2 trillion, whatever they are, few layoffs are not going to make any difference. So don't pay attention to the news at all. Just like whatever the government says, don't pay attention. Now, the news that you need to pay attention to is when the quarterly earning reports are coming out. Those are massive catalysts, like it happened with Dollar General, right? Its stock went down 35 points. So those are the days that you need to really pay attention to the catalyst because it sets up the next 2-3 quarters, right? Because when a company gets on a roll, earnings-wise, fundamentally on a good roll, it's not only one quarter, it's like 2, 3, 4 quarters in a row. So you need to pay attention to those kind of things. Vic says, I'm paying attention. Yeah, I like the chart, but I think it's in resistance. And Stephen, yes, yeah, please. So whatever you see, like my mentors on Wall Street used to say that, one day I was trading and because I'll never forget what they tell me. And then they go, you have tomorrow's paper? I'm like, what? Because they would always, every day, there'll be something like this. You have tomorrow's paper? I go like, no. I go then just trash the paper, trash the Wall Street Journal. It's yesterday's news, bro. Now, if you have tomorrow's news, then I'm interested. I'm going like, man, that makes a lot of sense. Because when the news is out, everybody knows already. Whatever happened, happened already, right? So don't work on past news. Look at forward news. And so that's it. You guys have any other questions? Are you being shy? Again, so summarize. Okay, I talk about topics. Okay, please. I don't know if I'm. Yeah. So share, number one. Like, please, thumbs up. You know, Algo likes it. I know Algo likes it. You know, I think I'm open for super chats if you're feeling generous. Great. If not, no big deal. Number two, I'm going to start memberships on the channel probably next week. Chris is doing that part. I don't know. I'm going to do live streams Monday, Wednesdays, and Fridays. So make sure you join me on Wednesday because it's the Fed rate cut day. And I go live every Monday, Wednesday, Friday, 10 a.m. Pacific, 1 p.m. Eastern. And on the first 2 days, Monday and Wednesday, I don't talk about topics. It's just I'm trading, you know, short-term trading or talking to you about my positions. Right now, I'm literally 98% cash, which feels great. And so I'm like, okay, cool. Let me answer this question before I ramble on. Jude Jr. Jacqueline, do you hold any long-term? Absolutely. Absolutely. So I have 3 portfolios. One is my active trading account, which I shared with you guys. Was at Schwab. It got moved over to Thinkorswim, but it's fine. With Vic's help here, I learned how to use that thing. On that account, I'm up about 120% so far this year. I was up 200%. I was actually short the market, but on the way up, I gave up, I think about 20% because I didn't believe the rally. But then luckily I got out, right? That's risk management. So up 120% on my Schwab account. I have another account that it's pure long-term investing. Great names like Nvidia's and Apple's and, you know, not all the Mag 7, but, you know, Goldman Sachs's. And, you know, I have like a basket that I created for myself between financials, technology, resources such as, you know, gold stocks and things like that, oil stocks. So it's a basket that I created for myself, the companies that I like. And then I have a third portfolio, which is bonds, municipal bonds, because municipal bonds, there's no federal tax. And I actually moved money from my long-term portfolio to municipal bond portfolio over the last year and a half to 2 because the rates went up. And on municipal bond portfolio, you have to look at it equals. So on a taxable bond, like a 10-year note, 2-year note, 30-year bond that you buy, you have to pay tax. It's ordinary income. But on a municipal bond portfolio, the way you figure it out is if you buy a municipal bond, as you know, there are ratings of those. Make sure you buy at worst A-rated bonds, you know, AAA, AA, A. If you're getting 3.5%, 4% on a municipal bond, double that. That's your taxable return. Well, on the taxable return, equal return on a taxable bond, the rates on a T-bill, which is short term, were like 5%. Well, on a municipal bond, you're getting 8%. So, and you don't pay federal tax, only pay state tax. So that's what I did, actually. I sold some of my stocks and moved it because I'm getting older. I need more income than growth. So that's what I did. Okay, yeah, questions. Shoot it. SPC. Okay, I'll look at SPC and it goes. I'll look at SPC. Let me answer the. Do you hold it? Yeah, there are some stocks I don't sell, but I explained it to you, so hopefully that answered your question. SPC. I'll look at it in a second. Isn't that? Yeah, I know who that is. I'm a newbie. Should I change my Robinhood account cash from? Well, I'll explain the differences. So on a margin account, Robinhood will allow you, because you have to have 2,000 equity plus 2,000. But then if you're in a margin account, there is restrictions. Like my account is on a margin account, or small account is Robinhood, is on margin. So on margin, it will allow you to buy and sell something right away, but it's gonna cost you money. And you have day trading restrictions, which is called DTE. No, PDT, pattern day trader. You cannot do more than 3 day trades with a margin account, but you can do unlimited amount of day trades in a cash account. But you can only trade with settled funds. But I keep saying a lot of buts, but there are goods and bads about both. On a margin account, you can buy, if you're buying stock, you can buy double the amount of your money, pretty much. Like if you have $2,000, you can buy $4,000 worth of stock, and you can sell that one and buy another one right away without waiting for settlement, right? So on options is 1 day settlement, on T+1, and on stocks is T+1 as well now. So on the cash account, if you buy something, you can day trade in and out, but then you can only day trade to the amount that you have in your account, and you have to wait 1 day, okay, for it to settle, for the funds to settle, meaning when you're trading, when you're buying and selling, you're selling it to somebody. So that cash comes into your account. It takes 1 day for it to settle, so you can buy stuff and sell stuff again. So both has its advantages and disadvantages. My way of looking at it is, if you're going to day trade, you definitely should have 25,000 minimum equity on a margin, so you don't have pattern day trader rules. But if you have small account, yeah, cash account is fine. If you had less than 25, I would keep it cash, yes. And but then if you're going to day trade, 0 day DT options and all that stuff, please be careful. You're going to blow your account a few times, I'm pretty sure. What else? That's that question. See, I knew that was coming. Oh, look at this. Well, thank you, Mojotronics. Thank you, buddy. Much appreciated. Hey, Chris, look, we got paid. I appreciate it. So you want to, okay. Please don't do that. Why you want to do that? Just if you just follow me this week, you would have made like 100%. How many of you should actually? Okay. Well, I explained to you the differences between a cash and margin account. One of that. Okay. Dabble in day trading with what? 0 day trade, 0 DT options, futures. What are you going to dabble in? You're going to blow your account, I'm telling you. Okay. I'm not trying to scare you. It's your money. You can do whatever you want with it. But I don't know what else to tell you. So ask people who have blown accounts. Okay. I'm sure you know enough people. I'm gonna check SPC, and then Big says ready to not yet. Keeps grinding, sir. PI has done great. I'm a long-term holder. How can I trade this by options? Okay, let's look at PI. PI and SPC. Can you guys see? All right, so let's go look. You guys can see the screen, I'm pretty sure. Mojotronics, my email is sergio@sergioavidian.com. I mean, everybody knows it, but if you have like some questions, okay, don't ask me trading advice because I will not answer those, but we can continue the conversation there. Thank you again for the super chat. Much appreciated. Super sticker. Let's see. Let's go look at it. Let's go look at it. SPCE. Long term. Oh, Lord. Did this have a reverse split? Oh, this is Branson's company, right? Gosh, man. I don't know what to say to this. What do you think I'm going to say? It's a downtrend. I wish I was short. Gosh, it's a horrible looking chart, bro. I don't know. I wouldn't. I don't want to be too brutal. I don't like it. That's all I'm going to say. I mean, look at this trend. Look at this chart. What do you want me to say to this? If you're watching me, you know what I'm going to say. It definitely had a reverse split right here. I'm pretty sure right here. Yep, 1 420. See, how did I know that? By looking at the chart, I knew that. 1 420 cent reverse split. Instead of 24-1 at 1 420, so 24-1. So this thing was like into the pennies. Now they did a reverse split. It's a 7. Long term, I don't know. Not one of my favorites. So sorry about that. CI, Cigna, insurance companies have done really well. Nice and slow and steady. I mean, yeah, they do well because they keep charging. This is not an option. I mean, look, you don't want to trade options on slow moving stocks. Okay, let's look at shorter term. Look, man, you don't. Why do you want to trade options on this? I mean, it's going to be. I mean, you could. It's just kind of going sideways before. Actually, it's kind of breaking out, pull back, a little cup and a handle action here. Yeah, you can trade options if you want. Nice looking chart. Went sideways for how long? I don't know, 6 months. By the way, stocks only go up 3 months out of 12. The rest of the time they go sideways, people. So when they're going sideways, you sell options against it. You sell premium. So you're lowering your cost basis, right? Because it's going between, let's say, 320 and 350, 360, right? Every time you sell an option, it's going to expire worthless. And then so you create income, actually, if you own the underlying shares. We'll talk, actually, and I'll talk about that a little bit more next week. Either Monday or Wednesday, covered call writing and things like that. Like you can buy a stock and sell the calls against it, lower your cost basis, all that good stuff. So yeah, nice looking chart. Cigna, they keep raising. I'm not with Cigna, I'm with State Farm, but they're raising my premium. I'm sure Cigna is raising their premiums. Insurance companies are printing money. By that they're taking the risk. Obviously had its swoon right here. But I mean, if you're going to trade the options, I'll go back to comments in a second. If you don't trade options on Nvidias and tech stocks and microchip stocks and Apples and things like that. These insurance companies are a little boring to trade options on. But then you call or Upstart, like you have. Okay, actually, let me get back to the screen and I'll answer more in detail. If you're going to trade options, PI, not CI. Sorry. Okay, let's go back. I apologize. PI. Let's look at PI. CI. Oh, CI. Okay, never mind. Sorry. That's where my mind is at. I'm 98% cash. I have not a worry in the world. So PI. Bro, PI. What's PI? What the heck is PI? Impinge Inc. Look at this one. See? I'm taking this note. I am PI. And what was the other one, Vic? NNA? Was it NNA? Man, you guys are good. You guys are giving me 2 ideas. See, this is what a community is for. We come up with ideas. You can't just keep waiting for me to come up with ideas. I have my ideas. NNE. So I'm adding NNE and PI to my. Okay, let's look at this chart. Okay, this is a 3-year daily chart on PI. Impinge Inc. Is this a Chinese company? Probably not. Okay, well, let's look at it. Let's shorten it to 1 year, 1 day. Man, it's making a new high. What's not to like about it? Did you get this from the IBD 50? I bet you did. Did you? All right, you want trade options. All right, so what do you think you should have traded options on this? Whoever asked this question. I mean, I don't know. Right here, when it literally touched the 200 EMA. So for all of you who watch me, as you guys can see, my charts are naked. I can do it because I have experience and I don't want to create bias for myself. Okay. So what do my charts have? 20 EMA, 50 EMA, 20 EMA in yellow, 50 EMA in blue, 200 EMA. EMA means exponential moving average. In red, volume, MACD, and once in a while I'll check RSI. I don't have anything else. You guys see any lines? No, I don't need lines. I mean, I could draw lines with the system. Beautiful uptrend. What else is there not to like about this? So whoever asked me this question, when it's consolidating like this, you don't trade options. On a breakout, when the volume is coming in, I'm circling now, you trade options. Right here, goes sideways, sideways, sideways for God knows 3-4 weeks, breaks out. That's when you trade options. Now on the it top twice, put a couple of tops, came down on the mini crash to 130. That's where you give it a shot. Low risk trade. You risk the low of here, right here, about one. I'm sorry, you risk the high here. I mean, that's just that pull. I wish I had known about this. I 100% would have traded that. Not only it's on the 200-day, but it's old high becomes new support. Shit, definitely would have traded this. That's when you buy things. I mean, is it really super volatile? Yeah, 140. Yeah, you can trade options. Made a new high yesterday. ATH. What is there not to like? Uptrend is uptrend. Lovely. Thank you, guys. PI and NNE. See, we're building a community. We're exchanging ideas. We are on our way. Okay. Yeah, I know. Okay. Okay. Oh, Ernesto. Let's see. PI. US based long term loan. Great. Beautiful. Wonderful. Amazing. Thumbs up. Okay. Next Monday. Tune in next Monday. We'll do an example. I'll get some charts out. NNE. I got NNE. NNE and PI. What's on my watch list now? Okay. Could draw them for new boobies, not boobies, newbies. Boobies. All right, let's do. What do you guys want to? I'll go to charts and I go. So I have a meeting at 12. This is what happens when I'm 98% cash. I don't even know what to do myself now. I am buying shit over the weekend. If you guys are gonna thinking about that, okay, hold on a second. Okay, let's look at Nvidia. You want to look at Nvidia and draw charts? I mean lines? Sure. Now Vic is gonna be proud of me because I know how to draw lines now. Nvidia. All right, let's do it. Okay, let's go back a while. Let's talk clean about, instead of uptrends and downtrends and trend lines, let's talk about support and resistance. How do I recognize support and resistance? Let's look at those. We're going to draw uptrend too on the longer chart, but let's draw support resistance. So support resistance is key technical words, right? Support and resistance. Resistance means a stock approaches a price that has visited before. That's why it's resistance. Okay. So where would resistance be and support be on Nvidia by just looking at this piece part right here? Okay. Well, first line of resistance for sure is going to be the old high, which was 132 after the mini crash. You went to 90, literally 92, and then bounce all the way to 132. That's 40 points, people. You're trading options. Remember what that means. So drawing tools. I still don't like these tools, Vic. I love my Schwab. Okay. So right here. See what I mean, Vic? Where's my... Did it freeze? This some bitch. Did it freeze? You guys can see this? Oh, there it is. Of course. Hold on a second. Son of a bitch. Okay, hold on. What the hell? Uh-oh, I'm stuck now. What am I supposed to do here? Vic, I haven't had this problem. Okay, hold on a second. Let's change charts. Okay, let's go back to NVIDIA. All right. Okay, so I think it froze for a minute there. All right, so for whoever asked the question, actually, let's draw some support resistance lines. Right here, the all high would be resistance. And right there, that's resistance. That's one. Support, okay, would be naturally down here, the old low. More support, because it's on a short-term uptrend, would be down here. Right here. You guys see these red lines that I'm drawing? More resistance. These are all horizontal, by the way. Support resistance is always horizontal lines. Okay, more resistance up here. Right there. More resistance at the all-time high, right there. All right, so now you have these lines drawn. Okay, all right. So basically what you have to do now is when the stock, hold on a second. Let me go back to my cursor. Okay, so when the stock approaches the old high of here, 132, and this high, and this all-time high, it's not going to go move through like hot knife through butter, right? I mean, that's it. That's what that means. So this definitely now, this last 4 days ago's low, right, at 100 or 100 and change, is definitely support. Next time it visits here, you have to consider the support and be a buyer. Right now, we're in the middle of nowhere. So if it approaches at 130, 132, I'll either be a seller or shorter because there is resistance up there. This is simple, okay? Obviously, the other things you need to incorporate in all this is moving averages, short-term charts, long-term charts. There is a lot more. So, Stephen, go buy that book, Technical Analysis by John Murphy. It's on Amazon. I think it's like $18, $20 book. Learn the lingo. And so, yeah, those are lines. I mean, I can draw a million lines, but then what does it do? Now, what it does is actually, I mean, look at Upstart, and maybe I can draw lines on that one. What it does is it gives you a benchmark of where to get in, where to get out. Okay, I'm going to draw a couple more lines, and then I'm going to go. Here's one. This is one of the charts I've been watching for at least a couple of months now. It's called Upstart. UPST is the symbol. So I'm going to draw. So as you guys can see, actually, I'm not going to draw. I'm just my cursor right here. I'm highlighting the stay. Stock went to, actually stock had an up move from 22.5, went up to about 32 and change. Okay. Then it just retested the all low. So if I had a line here, right here, that I would have had already drawn this line as support right here, the old low. You see how it coincides going back all the way to 20 here again, right here, right here. That would have been a support line. And it's no coincidence that on this bar right here, it comes down to 20 bucks and it reverses, right? Okay. Then earnings come out. This is the catalyst, huge volume, breaks out. I traded this stock and the options on this from about 32 to 42 range, okay? But now it had resistance at 32.5. Well, it went through it like hot knife through butter. That means there is strength. That means all these sellers got cleaned up. And then there's going back, there's resistance here, right? And all that got taken out. Now, once I liquidated it on the long end, I did not short it. I don't like shorting things that are on uptrends. So I waited. That's the 3 P's part: patience, position, and planning. I waited and waited and waited. And sure enough, I got rewarded. Stock broke its 20 EMA, which I'm okay with that. It's kind of coincided with the MACD turning down, but I'm okay with that. But the first pullback to the 50-day on an uptrending stock is always a good buy signal, okay? And also, this was resistance, remember? Resistance up here, and then when on the earnings day, it broke right through it. Old resistance becomes new support. And if I had a line right here, had drawn a line right here, I would have kept that line in there. And then on the first pullback to that line, old resistance becoming support now, is when you buy it. It's a pretty low risk trade, right? I'm buying it at 32, risking 30 or under the 200 EMA. I'm risking about 7% to make about 40, right? And it turned out to be that. And I said, it should bottom here, base here. It should bounce to the middle Bollinger Band. And sure enough, that's what it's doing. And that move was from 32 to 38. That's 6 points. 6 points on a $32 stock. Just the stock itself is about 20%. On options, I already bought and sold them in a matter of 3 days, 72% or 68%, some ridiculous number. So that's support and resistance for you guys. I don't know what else to say. And then another one was that I talked about Monday and Wednesday was Affirm, right? Okay. I mean, same thing on Affirm. Here was resistance. Earnings came out, went way above it, huge volume breakout, gapped up, and came right down to old resistance right here I'm drawing, right, which became support, and also supported by the 20 EMA. These are the things that you guys need to look at, right? And stock got almost as low as 35. Now it's almost at 45. 10 points in 4 days. If you're going to trade options on these things. But use the 3 Ps. You got to be patient. Don't herky-jerky go in it. Wait for your spots. If you don't wait for your spots, you're going to take your money. Market makers will take your money. Here's another one. Perfect example on Affirm. It broke out, and find these uptrends. You don't have to sell the low. I mean, buy the low, sell the high. Just got to find an uptrend that you can catch about 70 to 80% of the middle move. That's all you need. And on pullbacks, when people say buy on dips, this is a buy on dip situation. SPCE, for example, is not a buy on dip situation. PI definitely buy on dip situation because it's in an uptrend right there, right? Kava, Carvana, and all these things, they're all in buy and dip situations. You don't care what the market is doing. You don't own the market, you own the individual shares, right? So all these things, buy on dip or sell on rallies, and you can also go short, right? Here, if he's still here, he's going to cuss me out, but here's Celsius. Look at this chart. Who cares if the market's going up or if the market's going down? It's in a goddamn downtrend. Short every rally. So what happens on this one? Every time it bounces, you sell. You short, you sell, you sell. Find a downtrend or find an uptrend and work within that. Here, stock is 100, breaks down. You didn't catch it there. Okay, bounces a little bit. Bear flag, breakdown, bear flag, breakdown, continuation pattern, breakdown, breakdown, more sideways, more breakdown. The damn thing is at 33. It was $100. I mean, so it gives you $70 to trade with, and then just like it does on the way up, here's the up one, right? Here's Kava, right? And here's Celsius. That's the difference between two stocks in the same marketplace. While the S&P 500 keeps going up, one is dying, and the other one keeps making new highs. So you guys need to find a downtrending or an uptrending stock. Okay. It's not a coincidence, by the way, that every time this stock comes and hits the yellow line, which is the 20 EMA, and turns right back down, it's trending. It's showing you there's a downtrend. And so you sell rallies on downtrends, you buy you buy pullbacks on uptrends. But first, you got to find one. And finding it is easy. Look at your chart, put the 20 EMA, 50 EMA, and 200 EMA, because those are trending indicators. They're lagging indicators, but they're trending indicators. So at least it'll help you identify a trend. Okay, so that's it. I think I shot my wad. All right, so let's move that one. Let's have more questions. A few more questions if you guys have questions. Okay. You can erase them. Yes, I will erase them. Make the memory bigger and think it won't lag anymore. It's not lagging. It's my internet connection. Yes. Okay. Okay. All right. Cool. So hope you guys enjoyed it. Monday, please, 10 a.m. Pacific, 1 p.m. Eastern. Mojotronics, thank you so much for the super sticker. My first one. I'm proud. So the channel grew enough that YouTube has thresholds. Like you gotta hit this number, you gotta hit that number. If you hit this number, then if you give me your pinky, and if you give me your firstborn, then you can monetize. I'm going like, go F yourself, YouTube. So it's like, but I think we hit the threshold for the super chats and memberships and things like that. And well, it was pretty good. 3 months. 3 months is pretty good. So anyway, thank you for the support. So Monday, Wednesday, Friday, power hour. Monday, Wednesday is all about trading, no topics. My trades, full transparency, my account. Oh, thank you, Steven. Thanks, man. There's another one. There's one right here. Thank you. Thank you. We'll talk about the other question you asked me about this one. There are things happening that you need to be aware of. I should talk about that on Tuesday because we're going to put some stuff together. But long story short, thanks again. Much appreciated. So Monday, Wednesday, Friday, you can watch it in the car. You can watch it later. But then I'm putting out my charts, my positions, where I bought them, my cost, my losses, my gains. I don't know what else I can do. But then if you're following me, again, not trading advice, financial advice, I don't mind. If you caught it, you followed me, great. But you may buy it higher than me. You may buy it cheaper than me. And then if Tuesday I'm not doing a live stream and I get out of the position with a loss or a gain, and by the time you know, it'll be Wednesday, and then you're going to be pissed off. So take the risk on your own if you're going to follow me with what I'm saying. I don't mind. Tag along all you want. But this week, coming week, is going to be monumental week for the U.S. economy, for the markets. Wednesday, I'm going to be live, start at 10 a.m. We're going to go through the Fed interest rate cut, the first one in, I don't know, 3 years, 2.5 years. That ought to be interesting. We should get some volatility. But join me Monday, Wednesday, Fridays like today, topics and answering questions, and Mondays and Wednesdays just my trading. And that's it. So yeah, sure. No, that's not. Where's your donation then? Long story short, no. Those are all appreciated truly, but I'm putting in the work, man. These are people who appreciate it. Yes, please like and subscribe. Please share. Come on now. Come on. And talk about these topics on your dinner tables instead of, I don't know, some social media influencer BS. Although, as you guys may have watched, I was in this viral video. Just broke 2 million. 2 million people saw me. I mean, I was like, wow, that's pretty cool. And so it's pretty cool. Maybe I get recognized now. Maybe I'll just stop trading and be just an influencer. Too old for that shit. But trading is what I love. Teaching is what I love. And I'm trying to do both. So much love, much respect to all of you. Thank you for the super chats, Mojotronics, super sticker, and Steven. I will see you guys Monday, 10 a.m. Pacific, 1 p.m. Eastern. Tell your friends. Let's show up. And let's have a party. All right. Bye now.